Are we live? I think we're live. Good morning, everybody. Happy Friday. It is Friday, October 20th. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. I've got JC. I've got Steve. I've got chart wizard Alfonso. We got all the charts for you. Let's see. This morning we're talking Bitcoin. Obviously, we're talking Bitcoin. It's Crypto Friday. That's one reason. But also, Bitcoin. Have you seen it this morning? Have you? I know you've seen it. You've seen it, obviously. As good as crypto is doing, that is how bad solar is doing. We'll talk solar stocks as well. Ugh. Ugly, ugly, ugly. Ryan Dietrich is today's guest from Carson Wealth. He brought all of the charts, so get ready for that. You know the drill by now. Hit that like button. It's the button that looks like my thumb that's pointing up. Just hit that button. We'd appreciate that. And let's roll.
Mr. Strazza, better cuisine, Cuban cuisine or Japanese cuisine?
I have to go with Japanese, but
yeah,
I particularly like Cuban, and I'm surrounded by it where I live, so I eat more of it than Japanese when I'm down here.
Spencer just said Cuban food is his favorite ethnic cuisine.
I said it might be. Sushi is tough to beat, but it might be my favorite.
As a Cuban, I'm gonna go ahead and disagree there. As much as I like Cuban food, Spencer, we need to get you to my grandmother's house. Is what we need to do. Strazza's been there.
Fantastic.
Is she in Miami?
Do it. Yep. Abuela's in Miami.
Okay, I'm like an hour away. I can head down there this weekend.
Where are you, Spencer? Because I'll be there tomorrow.
I'm in Florida. I can be there later today. If you give her like an hour's notice, I can be there.
Dude, you show up at Abuela's house, man. You'll be there for hours. She'll give you dessert, cafecito. She won't let you leave. She'll lock you in there.
All right.
What do we have? Some ropa she made us?
Little ropa vieja. No big deal. No big deal.
Fantastic. Yeah.
Abuela kills it because she's got nothing else to do. So she takes her time. That's the secret. She's got all the time in the world. So for us, we try to do things fast. It just doesn't come out anywhere near as good. That's the trick. I have nothing else to do.
All right. All right. Should we do some state of the markets? We got some things happening.
I think we should. We should. Should we go straight to Crypto Fridays bumper?
Actually, yeah. Why don't we do that? Because Bitcoin is Rip City this morning. The miners are all ripping, so we got to talk crypto.
Rip City. All right, Crypto Friday. Let's go. Bitcoin up 1,000 points almost. Was up about 1,000 points earlier. Nice little move this morning. Is this real? Precious metals catching a bid. Crude oil continues to get a bid. Interest rates continue to go up, and now Bitcoin too. Anything but stocks? Is that the sitch there, Spencer?
Anything but stocks and bonds, to clarify.
Fair. Right, because rates are going higher. That's right.
Right.
Why don't we put things in perspective first? Because this is really the chart. We've been pointing to this chart since the summer when we started fading Bitcoin. Bitcoin failed 4 consecutive weeks at 31,000, and that I got kind of spooked. And temporarily that turned out to be smart, but now here we are back again to the scene of the crime, pushing that 30,000 once again. Is this it? I think we're gonna know if they can stick that landing. We start seeing closes above 31,000, and we stick that. I think that's really constructive because my thesis all along has been if Bitcoin is to break out above these levels, we're not just going to retest those former highs. I think we go straight through and go towards 100. No? Strazza? Where's Strazza?
You've been saying 31, right? That's the line in the sand?
Yeah, 30, 31. We like to draw our support and resistance levels with crayons, not so much exact pencils, right? So you can see here this gray line. This was support in 21, couple of times. Broke down last year.
Yeah.
And this is polarity 101. This is what Edwards and McGee were writing about in the 1940s, 80 years before cryptos were created. And sure enough, we're seeing here Edwards and McGee were right all along. No?
So it's already acted as resistance, 2 times this year. Do we really think this resolution is going to come when, if you look at the value line, the median stock is making basically new 52-week lows?
Why is that Bitcoin's problem?
It just doesn't feel like the right kind of risk on tape for a Bitcoin breakout to materialize in.
Got it. And what about when it did feel like a risk on tape this summer and Bitcoin didn't materialize? What about then?
Didn't work then. Why would it work now?
That's what I'm saying. Like, if it didn't work then because of those reasons, then those reasons clearly don't matter. Bitcoin's going to do its own thing.
What if the risk on period just wasn't long enough, right?
Wait.
Maybe it wasn't risk on enough.
Or that.
Don't you guys think a Bitcoin breakout of a major range like this would be more likely to occur in an environment where stocks were working, not breaking to new lows?
I would agree with that. That's what I would think in a hypothetical situation.
That's
we
all
don't live in hypothetical. Right. No, I agree with all that. Theoretically, this shouldn't be working. But we don't live in a theoretical world. We've got to trade what's in front of us. And if this thing's at 31.5, 32, what are you going to say then? Put the value line index.
I'm gonna be long so many Coinbase calls. I'm not gonna care what Bitcoin's doing at that point.
You're not gonna care what value line's doing. You're gonna care. You're gonna definitely care what Bitcoin's doing.
Right.
Okay, so technicals or not, do you guys want to know what prompted the move here this morning?
No. Well, you're gonna tell us anyway.
I am, because there's actually a reason for it. According
to who?
Oh, come on! Look at the chart.
According to the journalist that sees a move in an asset.
Pull up a 1-minute chart. Come on now. This is silly.
I don't put up 1-minute charts. I like my sanity.
If you did and you cross-referenced it with the timestamps on these news articles, you would see, right? You would see. Okay. So anyway,
all right. Tell me what they're making up as to justify the move.
Remember a couple months ago that the SEC has been suing Ripple, right? Which was at one point, the second largest crypto? They've been suing them going back to late 2020. A couple months ago, the courts ruled in Ripple's favor. Remember that XRP was not an unregistered security. Today, the SEC is actually just straight up just dropping the whole lawsuit against the Ripple executives, against everything. So basically, oops, our bad in the SEC, right? They lost. They go home with their tail between their legs.
And that's why you think Bitcoin's up.
Yeah.
So they're losing now a number of these cases in, frankly, an embarrassing way.
Yeah, this is pretty.
Maybe that does something. Maybe they kind of take a step, pull off the gas a little bit with all this.
What about this communist Elizabeth Warren talking about how cryptocurrencies are facilitating terrorists? By the way, cash does a great job of that too. Historically, a much better job, because you can't trace the cash. You can only trace the cryptocurrency. So
that's true. And yeah, the crypto is traceable once you convert it to cash, right?
I don't understand what the problem is. What is that lady so angry about?
Can't spend Bitcoin. I mean, she's
very angry, that lady.
So anyway, the SEC sort of, and this is all a reaction to I don't know if it was the first bubble or whatever number you want to assign the mania of what was it, late 16, early 17, right? A whole bunch of stuff happened in that November to January window. I think that was the first time Bitcoin got to 10, or maybe 20. I don't even remember anymore, right? And yeah, I think it was 20, right? And this is all sort of a reaction to that mania, and they started launching lawsuits left and right, and this was the biggest one, right? The Ripple one, and they lost, right? So
yeah, Spencer, I'm gonna stand by my opinion of not caring. Before I probably somehow you convinced me to care even less. Actually, so congratulations on that. You claim that this is because of Ripple. Ripple's down, first of all. Bitcoin is up. The outperformance of Bitcoin continues. that BTC dominance, which historically does not necessarily come at a time that cryptocurrencies are doing well. When there's that Bitcoin dominance, that's the safe haven. We're still seeing the Bitcoin dominance.
Back over 50%.
You know, so I think you're going to need to see some participation out of some of the other areas. So, Spencer, I appreciate your attempt.
Well, no. Let me attempt to sort of make everyone see eye to eye here. You know,
You must.
The news being what it is, you know, I know you don't care. I care a little bit, right? So there's news, but then in reaction to the news, the price reclaims some key level, right? And so one is sort of married to the other, right? So it's
No.
not. What do you mean no?
We have, first of all, it hasn't reclaimed any price.
I'm just
because somebody wrote something on the gossip columns doesn't mean that we need to care. And you explained to me why I need to care, and I care even less.
No, but you care what the price does. So now you have to be watching the price and see if it reclaims its level. And there's a catalyst this morning.
I don't know. I feel like we are all now dumber. You know,
That was coming.
this is just terrible. Right. Can we talk about what's actually important here?
Well,
So this is Spencer. I love you. But no. This is the resistance 3031, but flip it on its head, zoom in, and it looks much more constructive here, right? Doesn't it, Strazza? This is the bullish thesis right here for Bitcoin, holding that 25, holding. See, Spencer, we're above the anchored VWAP off the highs. Now that is news. That is news. Why aren't the journalists writing about that?
This is the bullish way to draw the chart right now. It's not wrong.
Yeah, I mean, listen, it's realistic. We have to zoom out and understand that we're still below overhead supply, but we're above support. So again, somewhere in the middle. I really like this momentum thrust. You want to look at the momentum thrust for early in the year? Look at that. So do these momentum thrusts typically come near the end of cycles or the early on?
Early innings, baby.
And then what about the percentage of coins oversold? There just aren't any. Just not seeing any oversold conditions at all.
You see like Solana and some of these alts? I would say.
Yeah, let's look at them. Let's look at them.
A bit.
Yeah, let's look at them. Look at the crypto index, first of all. So this is the top 100 cryptocurrencies equally weighted. And notice how it's breaking down relative to Bitcoin. In other words, Bitcoin making new highs relative to other cryptocurrencies, showing that Bitcoin dominance that historically doesn't necessarily come in healthy environments. So we got three cryptocurrencies to take a look at here. First, Binance. How is Binance not completely collapsed? Anybody? You got any news articles on that one there?
Exactly, right? How is it not? There's so much more room to go here, right?
They don't allow U.S. Customers to export any of their holdings, right?
Yeah.
So that's a bummer if you got a Binance account, huh? So if you had your whole net worth in FTX and Binance, you're just screwed?
You don't have one anymore.
Binance still works. What are you guys talking about?
My understanding is they don't allow U.S. customers to withdraw.
No, they closed down USD withdrawals, but you could still have an account.
Yeah? All right. Well, I won't.
I'm just saying, like, they're still around.
Well, that's a surprise. What about Cardano? Cardano hasn't this scam still going?
I left my money in, Mike.
Okay.
What are we thinking about Cardano? Do you realize that Cardano is still the 8th largest cryptocurrency, pushing $9 billion in market cap? Did you realize that?
You know,
would you have taken the over or the under on that one there, Spencer?
The under, because unlike Cardano, I actually still see people talk about other altcoins like Solana. I see a lot of conversations happening about Solana.
Go to the next one.
I don't see any conversations about Cardano ever. I don't know. Maybe it's just the people that I follow don't talk about it. But
it was always like a joke. Like for us, we don't care. We traded it because it's just letters and math, and we actually traded it very successfully. But like amongst the crypto community, it was always like kind of like a joke coin. Like even the Doge has been taken much more seriously.
Oh yeah, Cardano for losers.
Yeah.
Used to get laughed at. Talk about Cardano at a crypto conference.
And for us, like, we don't care. Like, we're just sharing what we hear amongst the community, right? Solana above 25. I like it. And honestly, I like Cardano above a quarter too. No?
I just question if these will be the same vehicles they were for us last cycle.
As kind of like a leveraged play on the crypto space.
Again, in theory, I would think Solana should be something you want to be in if Bitcoin is breaking out above 30. I don't know if that's going to be the case this time around, right? These alts have been really bad. And this is really the first evidence of any relative strength at all from something like Solana, and it's not much.
Yeah, Solana pushing 27 right now, above that 25 level. If you're going to be in, this is where you want to be in.
Can crypto even go up in a rising rate environment? Like, do we even know that?
Yeah, we do know that. It has been going up in a rising rate environment.
It has been?
Yeah, it went down in a rising rate environment, and it's been going up in a rising rate environment. Very similar to growth stocks, right?
Stop going up. Stop going up to me.
Well, maybe you're just looking at your chart upside down. So maybe flip it upside down. So last year, Bitcoin got hit with interest rates going up. Growth was underperforming value. And then this year it's been the opposite, Spencer. Bitcoin is the best performing asset this year. I don't know if you've done the math. By far and away, the best performing asset.
I don't think I've looked.
Well, clearly, you think it's been going down. It's actually been going up more than anything
else
on this planet.
I didn't say it was going down. I asked, is it going up?
You said, can BTC go up in a rising rate environment? Interest rates have been going up all year.
Yeah, right. And my point was Bitcoin can't seem to really get up above whatever 30, 31. That was my point.
Well, fine,
right?
but it's still up 80% this year. Are you not entertained? That's
yeah,
twice the performance of the NASDAQ.
Well, all right. So what I should have said was, can it keep going up in a rising rate environment? We don't know. That's the point I was trying to.
Well, here's the thing. When we talk about these growth stocks, we've been saying all year, can they keep going up in a rising rate environment? And yet they continue to do well in a rising rate environment. So I would throw Bitcoin in that same argument. Like, can Google keep making new highs? Can Apple and Microsoft keep making new all-time highs? NVIDIA, so these other software stocks, right? PanW and all of these things, can they keep going up in a rising rate environment? Bitcoin keeps going up in this environment also, just like those others. In fact, Bitcoin's doing better than those others. 80% this year.
Guys, forget this year. Yes, Bitcoin has gone up. It hasn't been the smoothest with rates this year. Go look at 2020 and 2021. Rates are ripping. Bitcoin's hitting new all-time highs.
That's right. No, so it's behaved just like growth and value, right? Last year, rates were ripping, growth underperformed. This year, rates are ripping, growth outperforms. And Bitcoin's trading with it.
It's a good question. It's a
valid
question. Yeah.
And the answer is yes. We know for a fact, facts only, that Bitcoin couldn't go up in a rising rate environment. What's wrong with that?
I guess we'll see how long it can go for.
I think the question,
it's gone longer than I would have guessed.
I think the question would be better stated with something like, how high can rates go and Bitcoin is still okay, right? Because I think that there's a level for interest rates where,
thank you,
once we're talking about 10%, the equation for growth stocks, speculative stuff gets, really hairy, and Bitcoin would be in that category. No.
All right.
Is there anything we need to know before we bring on Detrick? Anything special going on other than this fugazi news on Ripple that you're telling us about?
I mean, Solar is getting taken out behind the woodshed this morning and just beaten up. Solar Edge cut their guidance pretty good. So we talked about that yesterday, right? How it's more meaningful when a company misses its own estimates compared to when a company misses the analyst estimates, right? So here's a company this morning that's missing their own estimates, lowering their own guidance by about 20%, and it's taken the whole industry group with it. So if you own Solar, it's a tough morning for you. Solar Edge, all of them. Solar Edge is the primary one, but all of them.
You own Solar stocks, Spencer?
No, I don't.
Why?
Have you seen them?
Okay, yeah.
Yeah.
I mean,
okay. No, I don't. I don't think I've ever owned a silver stock before.
Oh,
Besides
last chart before we bring in Detrick. Pull up slide
Yeah.
1 quick, just to finish up this topic. Right. So this is it. 80% for Bitcoin this year, moving from the lower left to the upper right, and but not keeping up with that growth value, right? That continues to make new highs. But notice how last year, with rising rates and bonds collapsing, both of these lines were going down, and that changed this year, which is really, really fascinating. You know, these guys, you know, the Strazzas of the world and some of the others tell me that maybe, I guess, all of these assets were repriced last year, and this year they're just moving on, right? Is that Strazza? Strazza, is that right? Did I get that right?
Yeah. It's a theory, right? We don't know. Some of us like to, paint little pictures or make stories to kind of make our price action make sense, and that one makes sense to me.
Yeah. So Bitcoin catching up to growth value, or the other way around?
We would think these charts move together, and I think that would mean a catch up for Bitcoin.
All right. Talk to me above 31. In the meantime, it's dead money.
Yeah, you really don't know.
Yeah. Talk to me above 31. We'll do a whole thing about it. Take out a mortgage on my house. We're gonna.
Should we talk to Ryan Dietrich?
Let's do it. Bring him in.
All right.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Detrick.
Hey, Ryan.
Morning, guys. How we doing today?
Oh, well, I'm a Dolphins fan, so I'm doing just fine. Thank you. How are you?
I'm doing all right, too. I can't complain. I mean, I was on CNBC, and I believe me, you guys are more fun. I mean, that's for sure. But I was on like 5 hours ago. I don't even know. I've been up like all day. I feel like it's lunchtime. I'm starving right now because I was on CNBC so early this morning.
Where does one watch that? Like on the internet? Like they have like a website?
Well, hopefully you just go back and follow my Twitter, and you can just find the link when I was on. You can watch it that way. But
or I could just call you, be like, "Yo, Detrick, what are you seeing, bro?"
No, that's what we're doing today. So that's exactly right. You guys are talking about some interesting things. I want to ask you one if we can start. And you probably, maybe someone's brought this up.
Sure.
The S&P 500 is up on Monday 15 times in a row. Okay. This is the all-time record. Like for any day up the 15 days in a row. I'm just thinking in my head, I don't know if you have any guess. Is it the 0 date options on Friday expiring? We get a pop on Monday. Do you have any theories? Because I really don't. I really don't. I think everyone gets all bared up and then the end of the world doesn't come. We pop on Monday. I don't know. 15 days in a row. Do you guys thought about that at all? That's crazy.
That sounds like a crazy stat. How does it compare to like the longest streaks before this?
The longest Monday, I think, was 12 before this night. Honest to goodness, don't remember when it was. I mean, so it's getting to the point now where it's a good deal further. And I think there's like a 14-day one. If you look at the other 4 days, I forget which one it is. But I don't know. It just makes it because
hold on. Wasn't there like a streak recently of Tuesdays that were up a bunch of
probably
Tuesdays?
Probably Tuesday after the Dolphins win. I think it's a real bullish day. I'm kidding on that one. But
a lot of Tuesdays these days,
Yeah, but historically, I mean, it is what it is. We know this, right? Usually Monday is the worst day of the week. You go back in history, and we know because literally yesterday was October 19th, the anniversary, obviously, or birthday, anniversary of the worst day ever. But, for whatever reason, Monday is usually weak. Not this year. I mean, this year, like you just pointed out, some interesting factoids of, crypto and growth and value and how in the world's tech doing so well, what the yields doing is what they've done. I mean, those are some great questions. And I don't know. It just makes me wonder a little bit on a Friday, rainy Friday, by the way. Were you guys raining in Ohio? I don't know. It's rainy and dreary right now. I don't know.
Yeah.
I'm good.
Yeah.
I'm good.
I'm good. So I know I sent you guys some charts. I mean, you want to just go through some stuff? I don't know.
Hold on. Can we just start there for a second? Last year, interest rates ripped higher. Bonds got the crap beat out of them, right? As you recall.
Yeah.
And growth got hit accordingly, right? You had that relative strength in value overall. These tech stocks got killed. And then this year, you've seen the exact opposite, so, especially in the first 6 months of the year. Crazy outperformance. NASDAQ, best first 6 months ever, et cetera, et cetera. Rates are at the highest levels this entire time, yet the outperformance out of that growth continues. What changed from last year to this year?
Well, hopefully you don't yell at me. I'm going to use the F word. I mean, honest to goodness, some of the fundamentals. Now, I know I'm on a chart discussion, but the economy's not as bad as it was. I mean, I think last year we were in some trouble, right? We know there were some issues going on, and all that shock to the system with the supply chains and all the stuff that swirled around. And they hit the most expensive stuff, which was tech. And honestly, we've been more neutral tech all year. We've been overweight communication services for the last couple of quarters, so that's even doing a tad better than tech, I think. But again, you look at like some of the growth. I mean, there's a lot of earnings growth coming out of tech and communications, and I think it's just a realization that the end of the world didn't come. I'm still quite surprised, to be honest, that if you told me, a year ago we'd be flirting with 5% 10-year yield, would tech be as strong as it is, I'd probably have said no. But I think it's something to do along those lines. Also, we've been looking at small caps. We've got a slight overweight to small caps the last couple of months here. Clearly, that hasn't been working. I'm fully aware, but I think it makes a lot of sense looking back. A lot of these small companies, the S&P 600, for instance, it costs more, right? I mean, the yields have gone up a lot, and it costs a lot more for debt. A lot of companies like Microsoft, for instance, locked in debt at 2.6%. Now you can make 5.5%, in a 6-month treasury in some money market. So, a lot of these bigger companies locked in really, really cheap rates. Maybe that's the answer, actually, as I'm talking here. They locked in low yields, low rates a long time ago, and rightfully so. I think, in looking back, they did a great job by that. So they're truly not as impacted as small companies which weren't able to lock in as much at lower levels. These are just theories, believe me, but I think there's something to that.
I totally agree. I think the mega caps can do fine through this environment.
Yeah.
They could probably make money off rising rates. They have plenty of cash.
Listen, Mr. Dietrich, bond market doesn't mess around. This is a $120 trillion asset class, and bonds continue to sell off. What is the bond market signaling to us? You look at tips, new 52-week high relative to nominal yielding treasuries, crude oil, overlay that chart of crude oil with that tips, bonds ratio. What is the bond market suggesting here that I think people are forgetting? Was transitory just another lie all along?
Yeah, it might have been a few lies when you look back in history, I guess. But I think it is, I saw that chart you showed of tips there outperforming. I mean, that's really, what's this private still? There we go. Okay, chart. Throw it up. Oh, there we go. I see this. I'm learning how this thing works here. I think it is just our take is this. I mean, there's realization, yes, inflation is maybe a little bit higher than people want. At the same time, some of the economic data has been a little stronger, and we've been overweight energy. We've got a slight overweight to commodities in some of the portfolios of models we run for our advisors at Carson Group. So again, it's just these cycles, right? I know you guys talk about this stuff a lot, and I like to look at cycles too. We still think stocks are going to go higher. We still think we're in a overall bull market. We can get into that, but honestly, I think it makes a lot of sense that commodities in this type of regime that we're in, a little bit higher inflation, and we know we had 2% inflation. I don't understand what Powell said yesterday, thinking we're going to get back to 2% inflation with some of these things that are taking place. We think more like 3.5% inflation makes sense going forward. What should someone think about when they're doing a portfolio, looking at the world? I mean, energy's been our favorite group for several quarters. I think I was on with you guys in June, so we like energy the second half of this year, and clearly that's fortunately been playing out. But we like industrials as well, even financials. At least I should say large cap financials. All of a sudden, they're showing a tad relative strength. You're looking for something positive out there if you're a bull. So some of these more cyclical areas that potentially do well with higher yields are where we've been placed all year overweight, and we're still there. We've been underweight the more defensive areas, which is like catching that fallen knife on a relative strength basis. And maybe there's a play on utilities if somebody has a longer term horizon. They've been hit like nothing I've ever seen on. Well, few things we've ever seen before. But at the same time, I think it's just a realization economy's on its own footing. And I'll tell you, here's something that people might heads explode when we say this. We're talking about this for our outlook as we get in the next year. We do see some similarities now with the mid-90s, and here's what I mean. In the mid-90s, the Fed hiked rates aggressively. Bonds had a rough go. Nothing like they've had now, I'm aware. But then you know what happened? The inflation came back down. The economy stayed strong on its own. We see some similarities there. The Fed was able to cut. If you look back in your history books, in the mid-90s, the Fed cut rates, and nothing bad happened. We're all clued to the fact that the last couple of times the Fed cut was COVID, great financial crisis, and then the tech bubble. Bad times. If you go a little further, you can stand on your own. We think that's potentially the case. The Fed might be able to start cutting rates into next year, and that could actually be a positive driver for the stock market as the economy can stand on its own. I don't know what I just said.
When we talk about the strength that we've seen in some of these mega cap tech stocks, the names with the most cash, the the ones that don't need to borrow and everything like that versus the ones that do need to borrow. It's expensive and everything like that. Financial, small caps, etc. What about in the commodity space? I mean, when I see bonds crashing, the biggest bond crash we've ever seen, you know, and if you're looking at that Bank of America chart that goes back to like 4000 BC,
However
you
they
know,
do that.
other than that QE right around the birth of Christ, you know, this has been something that we've never seen before. Bonds just absolutely getting crushed. We've never seen a commodities bull market without metals participating. So if you're going to reverse engineer this structural bull market in commodities that, by the way, we've seen since crude oil traded below zero, it's been from the lower left to the upper right, outperforming everything in its way. But we haven't seen that breakout in metals yet. Never seen a commodities bull market without metals participating. So if you reverse engineer that commodities bull market, isn't rotation into metals the next step?
Yeah. Well, short answer, we think so. I mean, at least I think so. Our team thinks so. You know, you talk about metals. I mean, we'll talk about gold for a minute here. I mean, I'm aware gold hasn't done much the last 13 years, but as we all know, lately it's starting to show some strength here. And we run some tactical models for our advisors. We actually have about a 2, maybe we have probably about 2% sliver, about a 2% sliver of gold. We've had that for several months, as we just thought gold might do a little bit better in bonds. Will it beat stocks? Maybe not, maybe, but it's a good diversifier. And now we see that. And I'll tell you, I was out in California earlier this week visiting with our friends from PIMCO. We brought up, you know, metals and gold and things like that. And I'll just be blunt, they don't like it. It was music to my ears. They cited a lot of the same things. They cited a lot of the same things that all the pure fundamental guys with the CFAs and all that talk about when they talk about gold and why you shouldn't own it and this and that. I'm like, oh, this is music to my ears. And I made a joke. We should have had a little bit more. But yes, I think there's some interesting points about. I mean, real interest rates historically when they're higher, gold doesn't do as well. I know you guys have talked about this a lot. I'm just amazed that gold has done as well as it has in that environment.
Thank you.
Strength of the dollar we've seen. So there's these signals, I think, that are saying, you know, what are the 4 most dangerous words? This time is different. We know that, Sir John Templeton. But there are some things that say, boy, oh boy, gold has really held up well. And even, you know, materials we're more neutral on, but that's another group that I'm looking at, kind of some of these themes we're talking about here, that they going to be the next kind of ride to jump on with your industrials and some of the other areas that can do a little bit better if you have a higher commodity space. And those are the areas we've been in. I mean, those cyclical names, we've been in those, overweight those. So we still like gold. I have a little bit of a sliver in our tactical models. And, you know, it was aggravating. Believe me, it's been aggravating for a couple months. But at the same time, I guess it's better being all in bonds, right? We've had short duration bonds, underweight bonds all year, overweight stocks. That's worked out, you know, not perfectly, but okay. And now that little sliver of gold we think can be a real nice diversifier when you factor in. Okay, well, at least we're in TLT, which I believe is what we're down more now than we were than SPY and the financial crisis, are right about the same level.
Do you think of energy in the same way as a bit of a portfolio diversifier?
We do. I mean, I guess you look at last year, right? I mean, I believe it was all 10 other sectors are down on the year, right? Except for energy, or maybe one was real close to it. So I think it makes sense. We've seen before that maybe if you asked me 5 years ago, I wouldn't have given quite the same answer. But in this world, we've seen, energy absolutely can be a diversifier from that point of view. And I mean, you mentioned when oil went negative. I know we've all talked about this before, but September of 2020 is when they kicked Exxon out of the Dow. I know some of us talked about this outwardly, saying, "Oh my, isn't that problem?" After 108 years, 104 years, close enough for government work, but a long time. Exxon was in the Dow. They kick it out with the energy negative earlier. So wouldn't this be something if that was the signal? You guys have been all over the coal thing when they kicked out the coal ETF. And there are these clues from anecdotal point of view that don't always work, and they're obvious looking back. But when they kicked out Exxon, that was that signal, I think, that, boy, we could see a major change, not just for 1 or 2 years, but we're talking, 5 to 10 years. And here we are 3 years into it. And clearly that's been playing out. But I wish they would have left Exxon in there, but it is what it is. We'll use it next time too.
They're going to put it back as the cycle's peaking.
Exactly. Then we worry. Then we worry. But until then, exactly. Yeah.
Can we talk about sectors, winning sectors here?
Sure.
Throw up the seasonality chart, Spencer. Ryan does a lot of work on seasonals. We do as well.
Mm-hmm.
Are you surprised? First of all, are you surprised how surprised investors are that the market is messy and correcting during a time that historically is messy and corrects.
I guess you could say I am surprised by that because it seems shocking to everyone. That's I just got my Almanac Trader book in the mail the other day. I think that's
Me
all you
too.
got yours too. So
I
you know,
got
it's like
mine.
you just read that. That's been there before. Where third quarter can be messy. Third quarter of a pre-election year can be messy. I'm sharing here. Let me look real fast.
If the market wasn't doing what it's been doing the last 3 months, that would be very unusual.
And not just 3 months, as we know, literally like the last 2 years, midterm years are the worst of the 4-year presidential cycle. Did I truly see like a vicious bear market last year?
And you buy the midterm elections.
Exactly. And then you get there and you get your October low, and the fourth quarter of midterm year is very strong. I mean, believe me, you and I, we all were talking about this stuff a year ago. People thought we were crazy. And it's here's the other one. The first half of our pre-election years when all those gains happen, you can have some strength the second half. And everybody under the sun on TV was saying what? The first half will be bad. The second half, that's when the gains are going to come. And we said, wouldn't it be interesting if it's the flip-flop of that? And clearly that's where we are. And then again, where we are right now, right? We're right now, if history doesn't repeat but it rhymes, Mark Twain, we like to use that quote, right? You still be open to the idea of some type of a fourth quarter rally, and we actually added a little bit more equity risk 2 weeks ago, two Tuesdays ago, whenever that was, early October, the first Tuesday of October, in some of the models we run.
Why aren't you adding on Mondays? Why are you adding on Mondays, bro? You're paying up, buying on Tuesdays.
Yeah, that's a good question. It's a very maybe I need to fix that next time. But you're right. But yeah, we still think that it makes sense. They're going to have, if seasonality keeps playing out, it could happen. And the other, I said another chart, maybe you can find. I think it's interesting. This is more bigger picture stuff. But everybody's going to be talking about election years, right? Pre-election years normally strong. We know that. When you have a first-term president, they do even better, up like 20% on average for the S&P. So we knew that coming in. But here's the thing I think I really want to point out: the next year, so the election year, when you have a lame duck president, you know what happens? Stocks don't do that well. And trust me, I get it. There's 1,000 other things to pay attention to. But I always have this in the back of my head. You know, those of us that like to look at this stuff. When you have a president, first-term president, stocks are up like 12% on average the election year. So just be aware. There it is. Yeah.
Ryan,
go ahead.
What are you talking about? What if you have a president that's either going to be the old president?
I knew you were going to do this.
The other old president.
Well, and believe me, we're thinking about that one too. I think the key concept being, Mark, usually, this isn't perfect, I get it. Usually presidents get reelected. I know that doesn't always happen that way. So don't shoot the messenger here. So markets can be okay with, there's less uncertainty because you kind of know what you're going to get. I think one way, just big picture look at this, if it's one old president versus the other old president that we're getting at here, we're not going to be too surprised by any of the policies, whether you love them, whether you hate them, whether you like them, or you're indifferent. I don't think there'd be much of a surprise. So that's just something to be aware of. But just big picture, I think next year, if you start hearing people say, oh, it's an election year, and 2000 was horrible, 2008 was horrible. Yes, I'm not going to disagree with you. Those are lame duck presidents, but also clearly some other cycles were taking place. And again, I've already laid out, we don't see a recession going into next year. I mean, I know, we're talking a little shorter term here, but we just still see an economy that's stronger with credit markets. I know you guys been on this. Triple B spreads, are they showing much stress? I know what the yield, everyone's talking about the yield curve being inverted. Oh, LEI, the LEI, I think it was negative year-over-year 18 months in a row. If you've been following that stuff,
that's one of my favorite oxymorons, leading economic indicators.
Right.
Guys, high yield credit spreads are hitting their highest level in almost 4 months.
Yeah, they're popping a little bit. That's true. They're popping a little bit. I guess it's relative. They were very low a month ago. So we're seeing a tad of stress. It's not blowing out. But I will say on LEI, you guys remember Sonu? Sonu came on with me during Chart Summit. Thanks for having us. And this is the one that LEI, he does his own. And again, you can follow us on Twitter to see that. But our LEI is wildly different than the one the government does, because we're not looking at just what soft data say. We're not just focusing all the way on manufacturing. Look at there it is, at other things, which has been saying for a year now there's no recession coming. So our LEI is a little bit different. Can't give away what's in there. And honestly, I don't even know someone who put it together. But nonetheless, it's a little different than what our friends in the government have to say.
You think we get the year-end rally? You think we get next year started off on a good note? But what sectors are going to be the leaders? Communications have been a leader all year long. Energy's had its moments. Nobody's talking about healthcare.
Right.
Can you give us some insight as to which, because if you own the averages, you're going to get average returns.
Sure.
If you own the median stock, you're never going to make any money.
No.
So where are we allocating assets so that we can generate profit? Because that's what we're trying to do here.
Absolutely. Yeah. I mean, we are overweight industrials, communications, and energy right now, and have been there for a while. But I think industrials is that one group that potentially could do pretty well, as a realization that there's no recession coming. We get that potential chase. I like materials. I mean, I think we talked about that a minute ago. I think materials we are neutral, honestly, right, in the models we run. But that's one, if you're talking about going out 2 quarters or so, maybe the materials can do well. And I'll tell you,
in the materials, more chemicals or more of the mining stuff?
More the mining stuff, I guess, is kind of where I'd be on that one. But I will say small caps is the other one. And we like small and mid. We've got a little bit overweight small and mid relative to, kind of your average portfolio. And clearly it hasn't worked. But you talk to anybody, what do you think of small caps? They tell you, well, you're a fool. It's terrible. That's the past. I mean, so potentially we get some type of a peak in yields, or at least they stop going up. And maybe it's this 5% we're flirting with here. That could be some type of major change, or peak in sentiment, at least. Maybe small caps can finally take that baton as well. And believe me, I would like that, because we're positioned that way. It hadn't worked lately. But I like small caps potentially as well, as a realization that there's no recession coming. And honestly, getting to the seasonal stuff again, small caps tend to do well fourth quarter, early into the year, especially in a pre-election year. So every year is a little different. I get it.
But the economists told us a year ago it was 100% chance of a recession. 100%.
Hold on.
Those are our friends at Bloomberg. Our friends at Bloomberg told us that. Yeah,
Those
we
are
didn't
your
buy
friends,
that.
maybe.
Yeah, I know.
One last question. We'll bring it back to the charts. You like small caps. How are you guys managing the risk for that kind of exposure? Like, are you using technicals?
Mm-hmm. Yeah, I mean, we do.
Here.
Exactly. No, I definitely we use technicals as well. And honestly, if you average, we're talking averages here, looking at 60-40 portfolio, small cap exposure. I mean, we're only 1 or 2% above kind of your benchmarks. It's not like we're going all in. It's not like we got 65% small cap and 10% large cap. We clearly have more large cap exposure on a relative basis, but a little more small and mid. Honestly, mid might be our favorite group. That's the one nobody talks about, obviously. Right. But we like mid caps as well, and that's good. So guys, I look at the time. I have to hop off. I've got another thing at 9:15, and yeah, hopefully that's okay. I'm sorry,
dude. You're so pops. You're so pops, Dietrich. Get him back. We have more to talk about. Dietrich talks. He's like the Twista of technical analysis. A little like mystical, mystical. Remember mystical?
I have a face for radio too. People, I love your voice. It's like, I don't know what that even means.
I just want to pinch your cheeks.
Right. Yeah, well, you know what? I mean, maybe you can do that when our team's playing the playoffs. Now that Joe Burrow's a little healthier, Bengals got no bye. Maybe we'll be getting hot again. But you guys look good, brother.
Mix in a win and get out of last place in your division. Then we can.
Thanks a lot, Ryan.
Hey, they're 3-3 last year. I hear you. Believe me, I hear you. So maybe like small caps. It's just a matter of time. There you go. Bengals and small cap.
All right.
Thanks a lot, Ryan.
All right, guys. I appreciate it. We'll see you. Take care. Bye bye.
All right. Yeah, Ryan's a fast talker, but it's jammed with content.
It was hard to get a word in there with being on with these two, with how fast he talks, and JC. I don't know.
Ryan Dietrich. We didn't even get into sentiment. We had so much more to talk about.
I wanted to tell him I watch Ryan on CNBC, unlike you.
Where do you even watch that? Like
this morning?
My face when Detrick comes on.
Like, well, where does I have to go to the CNBC.com?
Are you you can't play dumb on this one, right? What do you mean? Where do you watch that?
Yeah, where does one watch it?
You worked at brokers earlier in your career where people did they not have CNBC on? Every trading floor I've ever been on in my life, CNBC is on.
Like on mute and stuff like that. Yeah.
You're gonna act like, what is this CNBC thing?
No, I know, but like nobody has cable anymore. So like, where do you watch it? Like a YouTube TV? Okay.
If you don't have cable, then the internet, right?
That's what I'm asking. Why are you breaking my balls? What does this have to do with 20 years ago?
Our friends are on all the time. It's nice to see them. You turn the volume up when Detrick comes on, then you turn the volume down when.
But then you need a TV in your office. Like, who does that?
I used to have one. I got rid of it.
Yeah, I listen to music. I'm thinking of bringing that back. Actually, I don't have one now, but
office TV. I got rid of it.
Oh man, you want to put music on? Listen to little hip hop. By the way, is Ryan Dietrich not the Twista of technical analysis?
That was
for you youngsters. Mystical. Remember?
Yeah, I know. I know. So JC's talking about rappers wasn't Busta Rhymes one of them too?
Busta Rhymes was really fast. Eminem has the record. I think what was what was the song about the God? I'm God.
Rap God. Oh yeah.
Rap God. That one.
Yeah.
He set like all kinds of Guinness Book of World Records for that one.
You know what I
Draft
do?
That was
you know
crazy.
What I do though, I'll be in my office for most of the day, but you guys see me sometimes. I'll be on my laptop for meetings downstairs during lunchtime at 12 o'clock. I like the show on CNBC. I like to listen to Josh and some of our other friends who are off and on. I'll go downstairs, work from the laptop for an hour or two, have the TV.
You eat a lot.
I'm not talking about eating.
He's like lunchtime. He's got his Cuban breakfast sandwich. How many dinners you having?
In Asia, we were doing 3 dinners. We're back to 1 dinner.
Speaking of Asia, we haven't talked about this in a hot minute. We had the very first internal screening of episode 1 of Wall Street to All Streets yesterday, and I speaking for myself, I guess it was fantastic, right? I would say episode 1 is about 90-95% of the way there. Likewise with episode 2, it was we're getting ready to drop these. They're going to be dropped in maybe a couple months.
It's very exciting. Strazza, you have your flights to come up next week yet?
No, I got to book them.
What day do you need me to go?
What?
Are you flying from Miami?
I don't know yet. I got to see what kind of disaster flights I can find. Trying to get out of Key West is not easy. I will say though, watching that,
Kenny's going to come hang out on Thursday.
Good. Is Phil coming?
Phil's coming the next week.
Yeah. So anyway, we're going to be in Pennsylvania Tuesday to Friday, putting some finishing touches, voiceovers and stuff on the documentary, among other things. So we'll be remote next week doing the show.
Yeah.
Or I will. You won't.
I'll be working here as per usual. My new office almost ready, by the way. Almost ready.
It's weird, man. It feels a little weird watching ourselves. It feels so long ago now.
Yeah, it was like you guys just got back.
It all happened so fast. Like I was watching stuff yesterday, like completely forgot these things even happened.
I told you it was going to be a whirlwind.
Yeah, that tends to happen. So anyway, so here's the thing. If you don't know what we're talking about, we're doing a documentary. We sent Strazza and Sean and Giancarlo, our producer extraordinaire, to Asia for 3 weeks in the peak of summer. I'm not sure why we chose that time of year, but we did anyway. And the whole point was to, send them to the other side of the world and see what they can learn about Asian markets, Asian capital markets, Asian investors, how they approach the markets, how they think about these things. And we're doing it in documentary form. We're going to drop these episodes 1 at a time. And they're going to be free to watch. If you want to sign up and actually attend, live watch parties and hang out with us and get some bonus footage, use the QR code on the screen. That link will take you to a page. Just enter your email. There's nothing to happen yet. We haven't released anything yet, but we're going to be releasing episode 1, I don't know, pretty soon. And we'll have more details in the coming weeks about that. So you definitely want to get on the list there because let me tell you, it was good.
And I'll just say, watching it yesterday, I was thinking about it last night. I think there's something for a lot of people in what we did. Some of you might be super interested in something like the full Jim Rogers interview, which is awesome. Any finance nerd is going to need to see that. And then the rest of you, there's just a ton of culture in there, and we're just kind of hanging out, eating food, going to different places, meeting people. And Giancarlo just does a really nice job.
Yeah. Just getting up to shenanigans, right? Learning, it's like 60% learning, 40% shenanigans, right?
Yeah, shenanigans. It's a good word for it, I guess.
Yeah,
shenanigans. I want to hear Strazza's spotlight here, but before we get into that,
where's Kimmy?
No Kimmy today.
No Kimmy today.
No Kimmy today. But we do have other things.
Yeah, can we talk about this dollar index? This is really it, guys. Dollars had a tough time this week. If I would have told you that the stock market would be doing what it's doing this week, industrials, transports getting hit, what would you said the dollar's doing?
Oh no.
I would have said stronger dollar. Dollar's been weak this week, man. Again, not even today. No bid at all on the dollar. This is it.
What is with you?
What is with me?
Are you like, do you have blinders on? The price action this week has been so bearish.
In what?
Broader market.
Agreed. Why isn't the dollar making new highs with rates?
You're like trying to cherry pick maybe like the one positive.
First of all, I'm not cherry picking anything. I've been pounding the table about the dollar for years. I don't know where the hell you've been. I'm not cherry picking anything. I talk about the dollar every day of my life.
I have a bone to pick with you.
Please.
Why did you delete my chart?
What chart?
Credit spreads.
I didn't delete your chart.
Somebody deleted that. I thought it was you.
I don't delete charts. That's Spencer.
You're gonna pretend.
Spencer didn't like
I
it.
don't delete charts. Let me be clear.
I thought you wanted to pretend like this wasn't happening.
No, it just what? Oh, when Detrick, because Detrick, we weren't talking about this chart when Detrick was here. Why would I want to pretend this is happening? Yeah, what?
This is bearish. Sure.
Yeah.
Okay. The dollar hasn't made a new high yet. It's coiling in a nice bull flag at the upper bounds of a base breakout.
Why isn't it making new highs with rates?
Look at the run it's been on since July. It can't digest these gains.
Yes, it could do anything it wants. All that I'm suggesting, again, I will say it again. You don't have to be so sensitive about it this time. I'll say it again. If I would have told you that the market, the broader markets, to your point, would be doing what they're doing, industrials, transports getting hit like they are, financials rolling over, small caps making new lows, you would have said the dollar's ripping and making new highs, especially knowing that rates are making new highs too. And they're not.
So there's always next week then.
Maybe. I'm just saying. This is something, and I'm not cherry picking anything. I talk about the dollar every day. I don't think there's anything more important than the dollar, actually. I've said that too, by the way. Do you think there's something more important than the dollar?
From an intermarket perspective, yeah, you would, after the price action in stocks themselves, the dollar.
Yeah. The day the dollar bottomed was the day the new 52-week highs list peaked. The day the dollar put in its local high on October the 3rd is the day the new 52-week lows list peaked.
Oh, dude, I'm with you. I just think,
Stock market is under
it's
pressure.
almost like
Has been always. Why isn't the dollar going up? That's all I'm saying.
yeah, but you know how these correlations work. It probably goes up next week and makes that move.
Okay, fine, but it hasn't. And that's surprising to me. I don't know why that's that big of a deal.
No, the big deal is
It should be surprising to you too, because if I would have told you a week ago that all of these things were happening, you would have said the dollar's making new highs, right? And it's not.
Don't delete my charts.
Nobody's deleting your charts. That was Spencer.
How do I get blamed for this somehow? I wasn't
Spencer,
even
stop deleting his charts.
I didn't even do anything.
Was it you, Fonz?
Listen, maybe the dollar screams higher. And by the way, maybe precious metals are pricing in a little dollar weakness here. Why are precious metals doing so well?
Dude, I mean, nothing looks good right now, though.
What do you mean nothing looks good?
Just go through the sectors.
I don't care about your
Material.
sectors. Gold's making new 3-month highs
Commodities
with a stronger dollar. No? Sounds like somebody is not long Buenaventura.
Gold has really been ripping, huh? Wow.
Yes.
I didn't realize the move was this big. Yeah, overbought for the first time since Q1.
And if you get, God forbid, you get a little silver outperformance for once in its life. I haven't gotten that.
Listen, I'm on board with the notion of it's a bull market for commodities. Gold and precious metals are going to need to participate at some point. I just don't know when that is. I want to see these ranges break out. I think it eventually happens. And I'll probably be involved when it does, but let these ranges go.
Strazza, why isn't copper getting oversold?
And that's a great point. I'd rather be in probably copper than gold.
Is this the first great point that I make this whole time?
Well, the copper gold ratio should, in an environment where gold is breaking out, the copper gold ratio should actually be moving higher too, which means that copper should be moving higher at a faster rate than gold. It hasn't been the case this week or really all month, but typically that's what we see. No?
I'm just saying there's something funky going on. I can smell it. It smells funky, right there, Spencer?
Copper gold ratio looks like the Russell 2000 right now.
Yeah, terrible.
Well, it's hitting its lowest level since 2020.
I thought the copper gold ratio was supposed to go up with rates.
That's what I'm saying.
Yeah.
It should be going in the other direction. So a lot of these intermarket relationships, I really think deserve maybe less weight or a little room to breathe, because with dynamics in the bond market changing so much, I think these intermarket relationships that we've been used to acting in a certain way for so long, some of them I think will change.
I know for a fact that they will change.
Right.
I'm more interested in the ones that have not changed, and that
Right.
one is the dollar and the extremely negative correlation between the dollar and equities.
If this was 5 years ago, JC, and we were talking about interest rates, we were probably talking about copper gold. I can't remember the last time any of us have done a copper gold interest rates chart overlay. It just
It's not working. There's nothing there right now.
But it used to work great. So we're going to continue to see that with these intermarket relationships and ratios. So, like, as an analyst, you just got to keep that in the back of your head. Things change.
Yeah. Right. So is the dollar not making new highs because the correlation's changing? That's not the bet I'm going to make. I think it's not making new highs because somebody knows something.
All right. Our small cap's going to hold here because micro caps are getting absolutely blasted.
Throw it up.
Smalls are breaking the first line of support, which comes in at the year-to-date low. So I'm talking about the Russell 2000 IWM 170, right, is the first line of support. And then it's not going to take more than a day or two of some good selling to then hit the 52-week lows from last year, which come in around 163.50. If 163 and change, we're below there, I don't know. I think we are sounding a very different tune about markets in general.
Yeah, financials are probably making new lows too in that environment, right?
Yeah.
Can we do a little hot corner?
There's really nothing there.
We
today.
can. Was there anything?
I don't know. Come on. You got a monster purchase in America's best ticker symbol. How are we not going to talk about it?
That's a hot take. All right, let's see it.
So hot right now.
Tell me why that's a hot take. Do you have a better ticker symbol than ACDC?
Yeah, I mean, listen, great ticker, hard to find a worse looking chart in energy. So cool ticker, but that's all they got going for him. Throw it up. Wiley looks terrible too. I mean, look at this top. Are people just not reading books anymore? Hoboken, New Jersey.
You think this guy Dan Wilkes like plays like Thunderstruck while he's buying?
You think he knows that all the other stocks in his industry look great and are making new highs, and he's buying the one that's making new lows?
You don't think this is the double bottom?
Dude, I don't know.
No?
I mean, it's just, you're crazy to even think of buying something like this in an environment where so many energy stocks look so good.
And this, what kind of energy is this?
I think it's services. Yeah, oil field services.
Here, throw up slide one there, Spencer.
Listen, here's something. For these energy companies, the good ones are not just paying dividends, paying huge dividends. If you're buying an energy stock that's not paying you a pretty solid dividend right now, it's not an energy stock you want to own. These guys don't pay a dividend. So know nothing about them, but they're not like the others.
What about your boy? Dan Wilkes here, dropping 5.5 milli on this guy? 5.5 milli.
And here's what we do.
Are you not entertained?
No, this stays on our list. And maybe this turns into some base, right, that began at these May lows, and in 2 quarters or a couple months from now, this looks like a chart that we want to buy. We'll go back and we'll say, wow, that's pretty material purchase. He was on to something that's great. But I'm not going to buy the lows in something like this.
You wait for it to turn. Yeah.
But that's how this universe, right, and this scan works. The buys tend to happen at the lows. And as technicians, we tend to come in much after. We talked about Lilly yesterday. They're buying at the lows. We weren't. We're buying it 200 points higher.
What about David Taylor buying Delta Airlines? What's he thinking, huh?
Look at that chart.
Whew.
Yeah.
Man.
On the subject of the best ticker symbols, I'll give you that ACDC is probably top 5. I don't know if it's the best. You know, you got to think about things like HOG for Harley Davidson. You got to think about Fun for Cedar Point. You got to think about Moo. Moo is an ETF, but come on, Moo.
Moo's a good one. Moo is a good one.
Can you beat Moo? But ACDC is up there, no doubt.
Come on,
What is the best
AC/DC?
ticker symbol? I want to hear from the chat.
What's the best ticker symbol?
Yeah.
I mean, you play David
Yeah,
Buster's, TKO. That's a good one, Rachel.
Yeah,
That's a
that's
good
cool.
one. That's a great one, actually.
I don't know. I think AC/DC wins it.
Isn't
No?
Sotheby's like bid, right? Because they're an auction house. That's pretty cool.
Yeah, that's all
That's
right. Oh, WGMI, that's a good one. That is a good one.
Oh no, the best one. The best one. I got it. Because it's so stupid. And it just speaks to just what an awful trend this is and why you want to stay away from it. YOLO. Yo.
Is that
Is that the marijuana one?
is that ETF still around?
Yeah.
It is.
It goes down every
It has no assets. It doesn't trade.
Huh.
$44 million in assets. It doesn't trade. It's traded 1,000 shares today.
I had a buddy who, God, probably 5-6 years ago now, well, maybe less, got into the dispensary business up in Massachusetts when that was turning recreational. I told you about it, JC. I probably even sent you the slide deck. And he was always looking for like investors and this and that. And nobody was really interested then, at least people that I spoke to. Just talked to him the other day. He's totally out, selling his licenses, selling everything. Done. It's like you just can't make money in this business. Okay. So I don't know. Maybe we're at the point in the cycle where a lot of these things just like go away and things finally change. But what a shit.
I was looking at
business.
some of these deals when I lived in California, some of these grow houses. This was like in 2017, 18. There was nothing there. I never pulled the trigger on any of them. Thank God. That would have been a waste of money.
The last time I talked to him, he was calling me basically saying, "Hey, you want to invest?" Now he was calling me saying, "You know anybody who will buy this license?" I don't know, man.
I mean, there's still a bullish case. It just might take 5 or 10 years, and it all depends on the government, right? That's it. It all depends on the federal government.
How many of these pot stocks have gone to zero? That's usually a good indication.
Most of them are near zero. We've gone over this before, so yeah. I mean, I think there was definitely a pot stock bubble in the capital markets. They're really no fault of their own. It's not Aurora's fault or Tilray's fault that they were the only games in town for a period of time, and people just bought their stock. It's not their fault, right? That happened. But
Nobody's saying it's their fault that people bought their stock.
All right. So this was just to be clear, this was a $300 stock, Tilray.
Well, okay. No.
Adjusted.
That doesn't tell the whole story.
Hold on. So
crazy.
if it was 300 and right now it's 1.37 billion, and this was a $200 billion company. Do I have that math?
No.
But listen. It was 300 for less than for 5 minutes. Okay.
No, JC.
It went from 150 to 300 back to 150 on the same day.
But technically, it did hit 200 billion market cap.
Yeah, for a minute.
Really?
Yes, it happened in one afternoon. It was the craziest thing I've ever seen. Okay.
It was a squeeze. Somebody had to spray that out.
This was like VinFast before VinFast.
Yeah. So anyway, yes, maybe for a minute or so it was $200 billion. But
all right, so on a daily closing basis, Tilray, go back, got the chart, all the way back to 2018. I don't know if we're spreading misinformation on here or something. 20 billion was the peak market cap.
Are you sure?
20 billion. Right? Unless TradingView's got bad data.
I don't know.
Here.
Anyway, it's not. My point was, it's not these companies' fault that the capital markets got way, way, way ahead of the fundamentals, right?
Yeah, but dude, 200 billion. That never happened. That sounds insane.
Whatever.
All right.
It was 1/10 of that. Throw up the chart if you want.
I trust you.
Yeah. That sounds
Still
right.
crazy.
Yeah.
20 billion is still kind of bonkers. But
yeah.
Okay.
I know, for this pot stock, that is crazy.
Yeah, whatever.
You want to do let's do a little quick rundown and then we'll get into the chart report. So Dow futures are flat, actually. S&P futures down a little bit, 16 basis points, down 6 points. NASDAQ futures down 50 points, about 40 bips. Bond futures up, never seen it, 55 basis points on 30-year futures. Gold's up the same. Silver's up 3 times as much, up over 1%. Copper's down 1%. Oil's up 1%. Dollar is mixed with lower volatility and slightly lower rates. That's your morning rundown.
Anything stand out?
Yeah, VIX holding above 20. During a time when the VIX is supposed to spike and tends to peak right around now. This is where the volatility index tends to peak. The resilient strength in precious metals, the fact that the dollar's not participating to the upside with higher rates, right? No,
I don't like this price action. None of it looks good.
Price action in what?
You just mentioned the VIX hitting its highest level since March. Credit spreads hitting their highest level since June. Small caps hitting their lowest level since last year. Micro caps hitting their lowest level since 2020. The rest of the market now rolling over.
Why isn't the dollar making new highs?
We're on breakdown alert, in my opinion.
We've been on breakdown alert.
This is the most vulnerable things have looked all summer.
That's right. And we're getting just some thoughts. This CNN fear greed index is one of the worst indicators.
It is bad. It is bad.
It is really, really bad.
Yeah.
It is not a sentiment indicator. It is whoever built that is very confused. And it's just anybody looking at it is just going to be even more confused. This is one of those things where don't look at it. Like, what was it? Like Medusa's hair, right? You couldn't look in her eyes or something. Remember?
I don't know.
Right?
I'm not a big mythology guy, but I believe you.
Like you couldn't like look at Medusa's eyes, or like you die or just turn into stone or something like that, right?
Yeah, something like that.
Right.
Yeah.
Wait,
CNN.
Since we're being all bearish here, I have one more thing, but this isn't fully fleshed out, and I don't know what the charts say, so be gentle. But every day, I feel like there's another negative headline about supply chain companies, and it hasn't really spread to the capital markets yet, because those companies are obviously more mature and larger. But it's a lot of the smaller ones I'm seeing are shutting down, layoffs left and right. There was a big one here overnight, the startup backed by Bezos.
What kind of companies?
Supply chain. Yeah, and they're typically the first ones in a recession. Typically, they're the first ones to feel a pinch, right? I'm just not saying there's going to be a recession tomorrow, but it just seems like 3 or 4 days in a row now.
What is a supply chain company? Aren't a bunch of different companies?
They're like logistics companies,
right? So it could be anything. Nowadays, a lot of supply chain companies are also like tech companies, right? Not even joking, but like
supply chain companies. What does that term mean? I mean,
it's like companies. So it could be software, or it could be like logistics companies that help the transport. They help the transports, like Knight Swift, who had earnings overnight. CSX had earnings overnight, by the way. I think they're both up this morning. But these are companies that help those guys, get the goods from A to B and manage the inventory and all that stuff. So
I think you want to call them logistics companies.
Whatever, right? But the point is, yeah. Thank you. One hole. Yellow was a big one that was a few months ago.
You know that Yellow is YRCW.
Yeah, something like that.
No, it is. They changed the name. YRCW was Yellow.
But isn't that just the ticker?
No, it was YRC International or something like that.
Oh.
Yeah. They changed their name to Yellow.
Anyway, my point was a lot of negative things happening in the trucking, logistics, supply chain space. So I'm watching that.
Look at transports, right? The price action speaks to it.
Well, I said I didn't quite know. I hadn't.
Oh yeah.
This morning
so IYT.
Look at UPS.
What? What about UPS? What's off?
You want to make it? Literally is closing at the lowest levels in years.
Is that a head and shoulders reversal? Oh boy, big old top there. Yikes.
So this is Dow theory, is it not? This is old Dow theory.
Not looking good.
Yeah, I mean, listen, UPS, they better dig in. Like Strazza said, they're very vulnerable. If they're going to dig in, they got to dig in now. This is where volatility peaks historically. This is where stocks bottom historically. Now's the time, fellas. Come on in. Scoop them up.
If we're talking about what do we mean when we say things look vulnerable? Okay, let's take a step. Let's head back to Friday, October 6th. when we got those monster bullish engulfing candles. So this was 2 weeks ago now. Had nice follow through the following Monday, Tuesday, Wednesday, right? Markets look great. Since then, it's been straight down. After you get a nice save, repair those tops, right? Get the follow through. Then you want to see something high and tight, a little bit of consolidation, and then another leg higher, right? We're just totally rolling over and undoing all of the bullish price action that we saw 2 weeks ago.
Yeah, but I think that you're just classifying the market as this one thing. You think semis give a shit about your small caps?
I'm talking about the S&P. I'm talking about all these indexes.
No, I know, but I don't think that you could just blanket the market and be like, everything looks like utilities. Everything is vulnerable. There's relative strength out there, particularly in some of these tech stocks, continue to act well. I believe there was one Steven Strazza Jr. who once said live on air that software is one of the world's most important indexes.
Yeah.
Did that not come out of your mouth?
Yeah, but they don't look great right now.
Don't they?
Relative strength, maybe. Equal weight software is like, I don't know, a point away from its lowest level since May.
Fine. Well, we don't live in an equally weighted world. We live in a cap-weighted world.
Right. The point is, I just described the price action in one index, the S&P 500. The most of the others, the strongest ones, look the same way. Same price action.
I continue to be impressed with the relative strength of some of these tech stocks. I think, especially with rising rates.
Look at something like even today, right? Large cap software, IGV is down 50 basis points already. Trying to rally.
This AMD looks pretty damn good, man. This thing hasn't gotten oversold in a minute.
You guys are making my head spin this morning with what I should be thinking. Like, where on the fear and greed index should I be right now? You know what I mean?
You should not be looking at the fear greed index. If you look at the fear greed index,
but you understand my point, though, right?
You sit in timeout. If you look at the fear greed index, you go to timeout right now.
You understand my point, though.
2 weeks ago, here's what it is. 2 weeks ago, we were talking about what would it mean if these tops completed, right? Probably a leg lower. Where does that take us? Not good. It means deeper, further corrective action than what we've seen since July. Then we came in and said, they reversed it. They repaired the damage. They're failed tops. Then the follow-through totally fizzled out, and now they're tops again. Not only are they tops, but we're getting far more confirmation of that bearish price action from things like credit spreads, dollar higher, yields higher. Right?
Dollar's not higher. Dollar peaked almost 3 weeks ago.
Rates are higher.
Yeah.
Dollar broke out and held its breakout.
Why isn't it making new highs?
Why don't the multi-month highs and credit spreads concern you?
Why don't the multi-month highs in credit spreads concern me? I don't necessarily think there's anything to be concerned about. The market I hope the market crashes. Nothing would be better for me and my family than it just.
I hate when you say that.
Why do you hate when I say that?
I think it's such a bad take.
It's a bad take that I hope the market crashes because I'm 41 years old and I could buy equities for the rest of my life at a 90% discount. Why wouldn't I want that? First of all, I don't think that's what's going to happen. My point in saying that is that if I'm going to be a perma anything, if I'm going to be biased in any one direction, it's not going to be biased towards being bullish. I would prefer the market to crash, but I don't have any control over it, and I don't think the market's going to crash. I'm buying stocks.
No offense, buddy, but your argument makes a lot more sense if you're like 15 years younger. You're on the line now. Like you probably don't want the market.
Bro, I'm going to live to 100. That means I got 60 years left, man. Come on, dude. 60 years. Where was the S&P 60 years ago?
Hey, I know you got big plans and you're going to have a ton of money to put in the market in the future, but, on that curve, you're just about there.
By the way, JC, if your preference is for stocks to crash so that they can go up, you are not a perma bear. I have news for you. You're a pre.
Wait, say that again?
If JC's preference is for stocks to crash so that he can buy them so that then they go higher, you're not a perma bear.
The market goes higher because it buys the best stocks and buys more of those, and it buys little or none of the worst stocks. The market is literally designed to go up always.
Right.
Over time. That's what it does, right? There's nothing wrong with that. People get very upset about that. It's just arithmetic.
Right.
So yes, if I was going to be a perma anything, or if I was going to be biased in any one direction, it would be a negative bias.
No.
Right?
No.
Yes.
No, because
But I'm not. I'm buying stocks.
Because
So I'm
the
literally
next-
going. I'm
whatever.
literally overcoming my bias and buying
Guys,
stocks.
whatever.
Where's Patrick? We need
Patrick's
Patrick in
not
here.
on the schedule today, but we can still talk.
Oh, he's
but we
not?
can
Why don't you
still
take a
talk-
look at the doc,
But
Strazza?
we can still talk chart
No, we have-
report. I mean, maybe we're gonna have Ian, but his Wi-Fi is being spotty, so
No.
I don't know.
Yeah, bring it.
Ian's
Bring
traveling,
in
I
the chart
think, right?
report.
Yeah,
Strazza doesn't think I'm living to 100. Strazza's definitely not living to 100 the way he's been eating.
all right. Should we not eat Cuban food? Is that what you're saying? All right,
You
chart
shouldn't
report.
be eating Cuban sandwiches at 8 o'clock in the morning. No.
I couldn't even finish it because I didn't have a Kimmy segment today.
Get real.
See what
Anyway.
this is my
All right.
fat friend,
Chart
Steven
report.
Strazza Jr.
Chart report. Come on now, let's go.
Throw the Zaccardi chart up there. This is exactly what Strazza's talking about. Strazza, put the sandwich
Zaccardi.
down and comment on here, Mr. Zaccardi's.
Yeah, man.
Click-
No
Click
bueno.
the chart because the image doesn't show
you-
up
Or
there.
just, zoom in or something. Yeah, we can do this.
Fonz probably has one too. That'll
You
show
got to zoom
both
in on the
levels.
chart. Yeah, there you
That's
go.
a little better.
Zoom in on the
No, this
chart.
is
The
not-
chart.
That's not the chart.
That's not the chart.
The
Click
chart.
the chart.
The chart within the tweet. So you may have to
Yeah.
reshare it. Yeah, I
You're
would,
not-
but I would, but I normally I do this, but I'm on
All right.
mobile today. I'm on my laptop, so
So he's just pointing out.
Here's
those
slide.
levels
Throw
that
up
we
slide 1. This shows it. This is exactly what we were just talking about. Throw slide 1. So
Because
this is Mike Zaccardi.
Point is, there's two key levels, right? I think last year's lows are the bigger level, but that's where we're heading. They have to hold, and that's 4 points away at this point.
And if they were ever going to catch a bid, this is the time for them to catch a bid. Bonds are up today. Why isn't the dollar making new highs, Mr. Strazza?
Dude, micro caps gotten blasted. Remember when we were talking about 100 has to hold, 100 has to hold?
Microcaps, the ones that are by definition the least relevant companies on the planet, are those the ones you're talking about?
I don't think that's a fair classification of what they are at all.
You don't
They
think
give us
it's
some of the best
fair?
information.
You don't think it's a fair classification to call the least important companies on the planet the least important companies on the planet?
Least important to who?
Or
If you're an
Earthlings?
analyst looking for risk appetite information, I would say they're pretty important to you.
Yeah. Microcaps, risk appetite?
Yeah.
Yeah, I would go back and I would look at some of the strongest bull markets of all time, and you'll see microcaps underperforming in a lot of those.
Maybe they don't outperform, but they're not falling.
Agreed.
in
I'll
bull
give you
markets.
that. No, for sure. So
And
the
they're
question
tanking
that we've
right
been
now.
talking about is the underperformance here in microcaps, and the fact that microcaps keep making new lows. Is that a heads up that
It's
small
not.
caps are going to make new lows also, or mid caps, and then
No.
eventually large caps? That's the question, right?
So you said that wrong because it's not the underperformance that's giving us a heads up. It's the weakness on an absolute basis.
Yes, agreed. But it's underperforming the megas, obviously. So are the megas going to now catch down to the micros? Right? That's the question.
Listen, I think the evidence is starting to swing in that direction, right? I'll make a list for next week. We'll make a list. I got a long car ride tomorrow morning. Rose will drive. I'll get the lappy out, have a chart party. I'll make a
Have
bear
your
market
bag of
check.
sandwiches, you know.
We'll do a bear market checklist. Yeah, we'll stop at La Nina and get a Cuban. We always do. Best Cubans in the Florida Keys. Anyway, I think, look at the price action from banks, for example. We've had a lot of key things where we're saying, this is a key level. This is a key level. And it's like every morning I wake up, another one goes. The banks are getting absolutely hammered off of those VWAPs that we've been talking about. Look at today's price action. Ugly.
What about Bespoke's chart here? 34.5% of the S&P 500 stocks closed above their 200-day moving average. So nowhere near washout levels. Still plenty of room to the downside there.
It's funny that that's how you interpreted that. I read that and thought that's not a very high number.
It is not a very high number, but it's not a very low number either.
Yeah, I mean it's below 50. So
Yeah, but it's not a low number. We're nowhere near washout levels historically at all. Talk to me below 2015. Those
All
are
right.
washout levels. So that's
All
what
right.
that means
We
to
had-
me.
We had someone on the show, Zarling, just yesterday using a similar breadth indicator to make a bullish argument.
The 50
about
percentage of
how-
stocks above their 50 is down to washout levels. Yeah, that's more short
And
term.
he was interpreting this kind of this kind of action as a reset in breadth and market internal. So
On a short-term basis, because you're looking at the 50-day. Now, Bespoke is specifically referring to the 200-day, which, to my point with Spencer, is not that low of a number at all. It's actually pretty impressive, actually, that there's that many stocks above their 200-day. Yeah. I'm actually surprised the number's still that high.
All right.
Spencer is not entertained.
No. It doesn't scream bullishness to me. Just because you're not in, panic territory doesn't mean, it's good either. So
I was hoping Ian was going to come on. We were having a great conversation last night about momentum divergences.
Nerd alert.
And how they might be like the worst or most misunderstood or misused technical tool. And we were using the current momentum divergence in the Russell 2000 as an example, which I'm just going to mark up real quick. JC, take a look at it, right? Price is making new incremental lows. And since, I guess, just earlier this month, a little momentum divergence. Haven't hit oversold this week yet. So here it is. Basically, I was looking at this divergence and thinking the takeaway was bearish, not bullish for me, because I was thinking, okay, so it's not even oversold yet. It still has room to go. Throw up chart 1.
after this, we'll do some headlines because there's something I want to talk about.
Throw up chart 1 quick. So as technicians, are we not taught that this is bullish?
No. It's a downtrend.
The momentum divergence in the lower pane. Textbook would teach you that's a bullish divergence.
Potential divergence.
Potential bullish divergence. I look at this chart and I say, wow, at these key lows, and we're not even oversold yet. I think it's going to get oversold.
Yeah, if we start getting above
We're
170, it's a buy.
Right.
Above 170, it's a buy. Yeah.
Are most analysts or chart watchers looking at that and saying, ooh, look at this bullish momentum divergence?
Probably not.
You don't think so?
I don't think so. I don't think people don't do that, Strazza.
What do you mean people don't do that?
First of all, how many people in this world actually use the relative strength index? What percentage of the population do you think is looking at a momentum?
RSI is pretty popular because it's easy to understand.
All right, so would you say it's more than 0.1% of Earthlings?
It's the most popular indicator.
I would say it's less than 0.1% of Earthlings.
I was just saying. You got to be careful with these divergences.
Let's say it's 1% of Earthlings, which it's not. Still no, it's that and zero is still the same. No one's looking at this.
Price is so good. I like momentum less and less.
Well, momentum's very important, and momentum does exist, and we know that. And there's white papers. Spencer has something to say, but I want to talk about how the CNN Fear Greed Index is like putting ketchup on your ribeye. So, Spencer, go ahead.
Well, was it yesterday or the day before? We're talking about the percentage of households that own stocks in the U.S., right? I think it was yesterday. So it's very topical because I just saw this morning. Federal Reserve just published their triannual survey of consumer finances, right? And 58% of American households own stocks, either directly or through a fund. And that is the highest on record, higher even than the dot-com bubble and pre-financial crisis. All right. Now, the big reason for that is because there was a huge jump in direct ownership of stocks. So people owning stocks outright, not through a fund. 21% of American households own individual stocks, which is also the highest on record. So my point is, we're talking about yesterday about how most people don't own stocks, but that number is actually that's not true. Most of the people do own stocks now. The majority do, and it's rising. So it's at a record high.
My point is that all those people might own stocks, but when you add them all up, they don't own anything.
Well, yeah, sure.
The bottom 50% of households, right, own less than 0.5% of the stocks.
Of course, that's true. Obviously, right?
So they all might own stocks, but the truth is they don't own anything. They don't own anything that they don't matter.
What percentage, Spencer, did you say, like, of people?
Almost 60.
Almost 60% of American households own stocks.
In some emerging market countries, 5% of people own
Right.
Of
stocks.
course, that makes sense.
Oh.
I buy that. Yeah.
We're killing it.
Yeah.
Good for us.
Although the last time we got to these levels, again, it was .com and pre-financial crisis. I'm just
And
saying.
again, none of those people's assets matter. I can't
I
emphasize that enough.
I know.
They don't matter.
I
They
know.
don't matter.
I'm just saying. We talked about this the other day, and now we have some hard data to back it up. All right. Something about ketchup and ribeyes? I don't know.
Do you put ketchup on your ribeyes, Spencer?
Hell no.
People do.
I would never put ketchup on a steak.
Do they? Do they really?
Dude, these people are dipping their pizza in ranch dressing. Like the things that Americans do is disgusting.
Yeah. Papa John's, one of those fast food pizza places, like gives you sauce with the pizza,
Disgusting.
like ranch sauce or garlic sauce.
Terrible. Can you throw up the recess? All right, Spencer, I dropped the link. You could drop it in the chat. There's a full breakdown because I used to get asked a lot about the CNN Fear Greed Index, and I can't emphasize this enough. Looking at the CNN Fear Greed Index is equivalent to putting ketchup on your steaks. You know, you're looking for, this is a sentiment indicator, or at least it claims to be, but they're lying to you. It is not. If you look at their site, they actually explain the construction, and it's 7 different indicators. One of them is the S&P versus its 125-day moving average. So now it's looking at price momentum, which is not sentiment. It's actually momentum, right? So it's the opposite of sentiment. Stock price strength looks at market internals, the number of stocks hitting new 52-week highs. Again, these are trending indicators, not contrarian sentiment indicators. Stock price breadth, the volume of shares trading in stocks versus those declining. Again, I don't know where they're getting this data. Put call, okay, I get that. Junk bond demand, I don't see how that's sentiment. The volatility index itself, sure, that mean reverts. And then safe haven demand, the returns for stocks relative to treasuries. All of those are trending. So I would say two out of 7 are relevant to sentiment. The rest are not. So whatever data is going to come out of there is just designed to confuse you. I would just not look at it at all. I think this indicator does much more damage to investors than it does good. A lot more damage.
Can I play devil's advocate for a moment? What if people don't want to look at all that stuff or all the internals and they just want one thing to look at that will tell them how to feel?
That is what people want.
Yeah, I know. Yeah.
And why do you think they're wrong so often? Because they want to be lazy and they want to get a shortcut.
It's not about being right or wrong. It's about giving the people what they want. You got to give the people what they want.
Right. And they're doing that. But the truth is that they're just confusing those people. So the people think they're getting what they want, but they're just getting bad data is what they're getting.
Maybe.
It's like eating a pizza and being like, oh, I'm eating healthy tonight.
Well, yeah, it's got vegetables, right?
Right, exactly.
Right.
Exactly. Like eating the veggie straws, like, you know, those bag of potato chips that are veggie straws, like you're not actually eating vegetables.
Yeah.
You know.
Yeah. Okay. I mean, I agree with all that. I'm just.
And this has nothing to do with like politics. I don't care if it's like the CNN Fear Greed Index or the Fox Fear Greed Index.
I don't think anyone thinks that's
or like the Chinese, you know, Communist Party Fear Greed Index. Like, I don't care. It's just the construction is built for morons.
All right.
So, football season ended early for me again this year. It's over.
What do you mean again? You made the playoffs last year. What are you talking about? Again?
It wasn't good, dude. we all knew. No. It was a bad year. I'm excited for basketball season. It's 2 weeks away.
Yeah.
UConn Huskies. That basketball season.
You know that the Dolphins, the Heat play the Sixers on my birthday, which happens to be on Valentine's Day. So I am taking my wife, actually my wife is taking me on a romantic evening to lovely Philadelphia in the middle of winter.
Isn't she lucky?
That's awesome.
Yeah.
And she gets to go with me to a basketball game on Valentine's Day. Isn't that going to be lovely?
That's great.
Because we don't celebrate
Right.
Valentine's Day around here. Speaking of scams, because it's my birthday. So
All right.
right.
Let's wrap it up here. My recess will be if anyone has any recommendations in the West Palm Beach area, greater West Palm Beach metro area, let me know. I'll be there. I'll be here all weekend. So that's what I got. All right. As far as the schedule for the day, we are hoping to do What the Fic at 12:30. Stand by. You have to just show up and see if we do it. I'm not sure if we will because Ian's internet is very spotty. He's also traveling. We're going to hopefully do it. So you just have to show up and find out if we do it or not. If we do it, it is going to be a mailbag episode. We have been soliciting questions for the last couple of weeks about anything related to commodities, bonds, Forex, anything. We had a few that Ian has prepared answers for. We'll be running through those, hopefully, at 12:30. And that's what we got. So on that note, thank you to Ryan Dietrich. As always, thanks to all of you for showing up and hanging out and watching. We appreciate all of you, because without you, we'd be doing. I mean, we do this anyway, but it's more fun when there's others hanging out as well. So, with that said, everyone have a great weekend. Go make some money, and I guess we'll catch you guys on Monday. If we don't see you later, have a good one.
why isn't the
Happy
dollar up?
Friday.
Why isn't the
Why?
dollar up?
Oh man,
Nobody cares. I care.
Enough with the dollar.
Like the Rangers.
I care.
Like hockey.
All right.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then I go